fact, let's bring on board then an expert to talk a little bit about where the rupee is headed. Abhishek Goenka is now with us on the phone line. Abhishek, thanks much for taking time out. My colleague Neha Botraj is talking about the rupee stabilizing at levels of close to 75 to 76 to the US dollar. Is that something that we will have to call the new normal?
I think first let us understand that we are in a depreciating phase of rupee. So the carry trade which was happening over the last 3-4 years has turned from 65 onwards. So there might be some corrections in between, maybe 3 to 4% corrections. But overall, I think looking at the gap that we have in the current account, which might shoot up to around maybe 50 billion on an annual basis, or even though the RBI says the government says the fiscal situation is fine, but before election year, that is also something that an FIR has been looking at. Plus, the dollar returns, I would say, if you compare it from 2008 to 2018, after taking into account the currency depreciation and the kind of money that you have made in stocks have not been very lucrative. It is kind of flat. And with a depreciating rupee, I think that is making the investors nervous, and that's the reason we have seen more than $1 billion going out from the last 4 days. Oil is again something which is hitting, it's direct correlation with the rupee and the deficit scenario. And interestingly, the NDF markets internationally are also quoting at a 20 paisa premium right now, which used to be on an average 5 to 6 paisa on a normal depreciating day. For the last 2 days, that's the kind of quote which is coming. So looking at the current market, the depreciation bias is still there. Having said that, we are sitting at a 14-15% depreciation from the low. And if the stock markets are looking down currently, but the rupee has already depreciated quite a lot. So I get a feeling that possibly we might see some correction happening between 74 to 75 levels. It might stretch 0.5% plus minus, and we might get some correction, but it doesn't change the trend. The trend of the rupee is still bearish. As soon as we're going to see any corrections happening, the RBI would come in. The importers who are not covered for 3-4 months, they might come in. Some of the ECBs which are unhedged, those are people who are going to come in the market. So broadly, I would say that we are going to see dollar strength, but we should be prepared for some decent correction in the rupee, maybe in a span of 10-15 days going forward.
Okay, and Abhishek, how are you looking at the overall fiscal math and, the concerns that are building up on the macros, largely on account of the currency? What exactly is your expectation there?
So, as you say that current account, we all know that, if the oil goes to another $15, then we're going to see another $15-20 billion worth of current account gap increasing. So the estimation is close to around $70 billion of current account. It might just shoot up to say $85 or $90 billion. Now, where do you get the difference from? The only way you can get the difference from is in form of ECBs, which I think government has been taking steps. At the same time, I would like to mention that if they are making ECBs onus on the oil companies, I have my doubts that if in a depreciating scenario, how much the companies would be comfortable borrowing in the dollars. Because ultimately the risk comes on the companies. And looking at from the history of 2008 and 2013, I guess those companies may not be very comfortable to take on the dollar risk until unless the RBI give them some kind of a subsidy in terms of the swap cost, like they did in the case of FCNRB loans in 2013. So I guess until unless the dollar hedging cost come down, people would not be very comfortable taking dollar loans.
Thanks much.